All right, and we are live. Hello, everyone, and welcome to our latest Lodgify marketing webinar. My name is Miguel Alexander, and I'm a content marketing specialist here at Lodgify. And first of all, just want to say a big thank you to everyone joining. Looks like we've got people from all over the US. I see Texas, Colorado, California, Washington. Love to see where everyone's calling in from. So if you haven't shared yet, go ahead and put your location in the chat. And yeah, big thank you to everyone for joining. Today's topic may not be everyone's favorite, but it's obviously super important. So I'm very excited to have with us here today Miguel Alexander Centeno from Shared Economy Tax to talk to us about what hosts need to know about short-term rental taxes in 2025. So you want to introduce yourself, Miguel?
Yeah, I guess I'll just say thanks for having me. Happy to be here and hope to drop some knowledge bombs.
Definitely, yeah. Miguel's got a great presentation for us, so I'll let him get started momentarily. But first, just a couple things for everybody to keep in mind. Everyone in the audience is muted, so no shouting out. We cannot hear you. But if you've got any comments or questions throughout the webinar, go ahead and put them in the chat at the right side of the screen. Now, if you can't hear us, that is a problem. Couple solutions. If you see a blue button, you can see it there in my slide, tap to unmute sound. That means you're muted. Go ahead and give it a click. Other things to check, see if your audio is turned up, and then if that doesn't work, final solution, try just refreshing the page. A lot of the times that'll do it. Then finally, since we get this question quite a lot, yes, the webinar is being recorded and you will be getting the full recording tomorrow via email. So if you have to jump off early or you missed something, no worries, you can rewatch the full webinar whenever you want on YouTube. Okay, just a brief webinar agenda so you know what to expect. I'll be starting with an introduction to Lodgify for those of you who aren't familiar with us. Then I'll turn it over to Miguel to talk about short-term rental taxes in 2025. And then, as always, we'll end the webinar with a Q&A session. So we'll try and get through as many questions as we can at the end. Again, if you have questions now, go ahead and put them in the chat, or if anything occurs to you throughout the webinar. Keep in mind, this is a really great opportunity to get all of your tax questions answered by an expert. So don't hesitate to put them there. My one question or my one caveat would be that let's try and keep them as general as possible. So if you have a hyper-specific tax question that won't apply to anyone else, maybe keep that to yourself. We want everyone to be able to benefit from Miguel's answers. All right, very briefly, because I know we do have a lot of Lodgify customers here. But for those of you who aren't familiar with us yet, I want to introduce you. Lodgify is a vacation rental management software that helps you manage, automate, and grow your short-term rentals. Now, our goal is really twofold. So on one hand, we want to maximize the potential of your business, and then we also want you to take full control of it. And we do that with what you could really call an all-in-one ecosystem. So it starts with our website builder. If you don't have a website yet, you can use our website builder to create your own site and accept direct bookings in no time. It's super easy to use, no technical skills necessary whatsoever. Now, if you already have a website and it's just not set up to accept direct bookings, no worries. You can also use our booking widget to set it up for that functionality. And then once you have your website, you can use Lodgify to integrate with Google Vacation Rentals, which is really important so that when people search for a place to stay on Google, you can make sure your rental's appearing in those results. Now, chances are you also list on third-party platforms like Airbnb or Vrbo or Booking.com, etc. This is where Lodgify's channel manager becomes super important so that you can sync your listings across all of those third-party channels as well as your website and Google Vacation Rentals. This is really, really important for two reasons. One, you want to make sure you're not getting doubly or overbooked across any of those sites. And two, you just want to be able to manage them all from one place, right? You don't want to be logging into Airbnb to update something and then logging into your website to update it again. You want to do it all just once to save time, right? So Lodgify helps you do that with a unified calendar. So you can see all your bookings in one place, as well as a unified inbox. So you can see all of your guest messages in one place and respond to them directly from Lodgify. We also help you save time with messaging with automation and custom templates. as well as an AI assistant that helps you actually craft the messages to guests. Then we also have some advanced property management functionality. For example, reporting can come in handy when it comes time to file your taxes, as well as task and guest management, check-in docs, and a guest app. Then finally, we also integrate with or have a marketplace of dozens of third-party apps that we integrate with. So if you want to do something for your business that we don't already cover here, chances are we integrate with a tool that does do that, and you can get that set up super easily. So if it sounds like Lodgify could help your business and you haven't given us a try yet, we do offer a free 7-day trial, so you can do so. You can access the trial using that URL there on the screen. There's also a button at the bottom of your screen that says try Lodgify for free. If you give that a click, it'll take you right to our demo, and that'll be there throughout the webinar. And on that note, I will turn it over to Miguel to talk about taxes.
Well, thank you, Nicole. I really appreciate the introduction, and certainly an honor working with Lodgify. A lot of our clients do use the platform, and it's just an honor to be here. And I'll kick off just sharing. I have the distinct challenge and honor of making taxes interesting, digestible, and sharing 15 years of knowledge in about 15 to 30 minutes. So I don't know that I can really solve everything for you, but I think I do want to leave you with a nugget or two that you can actually implement over this call. So you are in the right place if you are here to learn about short-term rental taxes. I'll break down a little bit about what that means and doesn't mean in just a moment. But first, let's go over the overall agenda. So I'll share a little bit about who we are, so you know who you're listening to, and then we'll break down the core topic across, what do we mean by STR taxes. We'll talk about changes that are to come. Some we expect to come, some we have no idea will come. We'll get into that. And then we'll leave you with what I hope are tangible, actionable steps, at least a way to get started. And of course, our philosophy and message is there's no reason to go it alone. We certainly weren't. There wasn't a class in high school on income taxes, and there certainly wasn't one on Airbnb. So we give all the grace and hopefully context and tools to give you the ability to start solving some of these things. And by the end, I hope that you will have something actionable that you can do right after this call. Just one disclaimer is we are going to keep things general, and we have to, because the tax code, as people often talk about, is something like 36,000 pages. There are exceptions, and in fact, that is often the job of a tax advisor, is to find out where the exceptions are. Sometimes those exceptions are good, they're favorable, and sometimes they can be penalizing. They can hurt you. So we'll talk about things generally, but just know that there are always exceptions, and as we say, that exception could be you in a good way or otherwise. So make sure that anything you're going to do here that swings the income or tax significantly is something that you might want to find an advisor to discuss with. Well, a little bit about who you're listening to. I come from big accounting. About almost 8 years ago, I left to start a tax business for small entrepreneurs. And my philosophy was Fortune 500 strategies for businesses of all sizes. I quickly found that corporate clients have very different concerns than the small business operator. And I've learned that as an Airbnb host myself. So in 2018, partner and I, we bought an Airbnb down in Mexico. And we went through the process of how do we directly rent this out? Do we find a property manager? Oh my gosh, this is another country. I know I'm a tax professional and I have a business that services Airbnb hosts, but wait a minute. Now I've got to figure out international stuff. So just know that the stuff we preach is also the stuff that I personally have to deal with. And actually on the team, we have a fair amount of folks that have invested in the Airbnb space because we've been here. We understand the benefits of it. And we also understand things like what you have to do to qualify for a loan to buy an STR. These are all things that our clients deal with and we deal with as well. Uh, we are a team of 25. We are spread across the world. I was actually just, I'll also share, I'm an avid Airbnb renter myself. So this year already, we visited our team in Hanoi, Vietnam, and I stayed in Airbnb there, and it was absolutely crazy. It was right on the main road. So certainly, I think we are in the space, we eat and breathe the space, and we certainly have a long track record. I would say, I know it's because I've checked. We did the first uh, Airbnb tax webinar that I ever caught wind of back in 2017, and of course now there's a lot of folks out there saying that Airbnb is a strategy, and I think that's all true. I think we just want to take this time to make sure that we put up the right parameters and we talk about the right things that are important rather than just taking a soundbite off of TikTok and running with it. So we are in the space. Shared economy focuses on what we call online digital platforms. So it includes car share as well as freelancers. And then just last thing about me, I am an Austin FC ticket season holder. So if you are a client or someone that ends up working with us and you come to Austin and schedule aligns, definitely reach out to me personally. I'd love to invite you to a game. And then just a little bit about our firm. So I said that we operate in the space, and I just share this slide to say that we've been here for a long time, and we do take the time to meet with other operators, influencers. The reason we're here with Lodgify is that we really do think there's a value in getting the tax knowledge out. So it is something that I believe it evolves over time. Tax policy changes. I think your needs changes. We've certainly seen clients go pre-pandemic, I want 5 properties, to now saying, hey, I have 2 cash flowing ones. I want to sell the rest and I don't want to buy anymore because maybe interest rates are too high. And you see the reverse where, hey, I figured out the business. I now want to scale. And we want to make sure that the messaging, the strategy really aligns with what you're trying to do. So really important, I think, that we are clear that we know who uh, Airbnb hosts are, and we know that you're in different stages of either growing the business, or maybe you're in a different stage of life, or maybe you're looking at selling, or maybe you're thinking about having a cash flow that you pass on to your kids. So these are all the things that we are always trying to talk about. And the last thing I'll share is there's a picture of me in front of Congress in 2017. I testified on the Tax Cuts and Jobs Act. And I'll also say that with humility that literally nothing I recommend was adopted at all by Congress. And I was there really advocating for the small entrepreneur because you got a lot of interest groups and lobbyists that are talking about big companies. And I was there to kind of talk about the benefits of bonus depreciation. And there's some pass-through rules that went into effect. Now, on the flip side, and we'll talk about it, a lot of those rules have now expired. They had a 5-year sunset. I'll talk a little bit about what Congress, current administration is talking about bringing back, but a lot of tax benefits have actually phased out. And we'll talk a little bit about how we anticipate they'll come back. And I do have to say, we are ahead of a tax deadline, a big one. Maybe that's why you joined. And I just want to talk about a little bit what April 15th means to us. It is on a Tuesday, which means it's a hard deadline. Sometimes it switches because it falls on the weekend. No, it is Tuesday. So by Tuesday, it's the last day to initially file your taxes. You can get an extension to file, but it is not an extension to pay the taxes that you owe. And there's always funny memes around there. It's like, well, what if I don't know what I owe? And then there's like a meme of the IRS saying, well, we know exactly what you owe and you need to pay it. Well, if I extend it and pay it later, it's like, no, you get in trouble. So we'll talk a little bit what that means, but there's interest and penalties on any balance that you don't pay. So we do recommend determining what your balance is, even if it's a rough estimate. And if you do owe, to make a payment to limit those interest and penalties. Interest is at 8%. With inflation interest rising rates, that amount can total up quite a bit. And then also on top of all this, you need to, if you're filing a tax return, you need to make retirement contributions if you are making them by the time you file. And then the audacity, the IRS requires an estimated payment on that same day. So we often have clients that are like, wait a minute, I have to pay last year's balance and now I have to pay estimated taxes for the rest of the year, and the first one is due on April 15th. That can start to feel a little onerous. And what we usually say is, look, if there is a huge cash balance due, make sure you pay the extension payment first. That is what you owe for 2024, and then the plan should be to catch up and make estimated payments going forward. Well, let's get into kind of the core topic. And for those of you feeling a little overwhelmed already, you're like, wait a minute, you haven't even started. Good time to take a breath. And actually, it's a good time for me to take a drink of water. So I will take 1 second here. Okay, so what I show here are really kind of the on the ground questions that we get from our clients. I didn't want to just start going into the topic, so I want to just kind of contact, like, just look at the screen and see, are these questions, and I'd love to get some kind of thumbs up in the chat, or maybe even tell me which question stands out to you. But these are more or less the questions that we get mostly from our clients or from our community, which is, what the heck is a 1099? I always want to be aware and conscious that I've spent so much time in this, and as a team we do. And we have someone that comes in. I'm doing this for years, but I don't even know what a 1099 is. So I'd love to get a sense if any of these questions stand out. How do I track my information? I know there's accounting software. I know that I just use a spreadsheet? Most of these questions is why I'm here. I'm loving that. Yeah. What's a 1099 miscellaneous versus 1099K? So, team, let's hold on to that. And I want to come back to these in the Q&A portion. But it's good to see that a lot of this stuff is tracking. And then I would say the second to last question, should I incorporate or create an LLC? I think that is I think the most common question. I will say this, it's the most common question that you often don't need to worry about. I would just say, in terms of priorities, making sure that you have a way to track your expenses, and then the last question, like, how do you actually file it on your tax return? Do I put it on a Schedule C? Do I put it on a Schedule E? We'll talk about that in a second. We will talk about those things. So, yeah, what is deductible? I love that, because I think sometimes we're so like, hey, you can make a retirement contribution, and a lawyer's going to tell you can transfer your Airbnb into an IRA. And you're just like, wait, I just need to know what's deductible. So thank you guys for telling me what kind of stands out. And if those I think if more of these simple things come up, please put them in. I'll try to watch it as we go, but I'll try to tackle a lot of this. Again, 15 years and 15 minutes, and we got to speed up here. I see that question on traveling. By the way, it's a great question. So we talk about the big three, and I think it's important to kind of break up what we talk about into three categories, because it's good not to jump across all of them. It's good to say, okay, hey, I'm in one of these categories. Let's stay here. So the first one is taxes. Essentially, you need to report on the taxes you file, especially now that the 1099K requirement threshold is down to 5,000. A lot of you are going to get a digital platform 1099K, and it could be too that you get one from Lodgify. It could be that you get one from any direct payment. If you receive it on PayPal now, you're going to get these. And it's important to know that that is the starting point. So that is the revenue that the IRS has in the IRS database. They actually call it the IRS computer. So the IRS computer has a transcript of everything that was reported by, we call them platforms, Airbnb, VRBO, even payment processors like PayPal if you receive direct payments, even Stripe if you receive direct payments. So that is the starting point, and we need to file on it. Now, if you don't file on it, and don't do this, but if you don't file on it, what the IRS does is they say, hey, we see that you earned 10,000 from this platform. You didn't report it anywhere on your tax return. We're just going to tax you on 10,000. We're not going to assume that you have any deductions. We're not even going to look at what the commission charges were, because hey, if the 1099K says you earned 10,000, you didn't earn all of it. Your deposits were less commission fees, refunds, reimburse. No. The IRS isn't going to even think about that for you. They're just going to say, we see 10,000 in income, and we're going to tax it at your highest marginal rate. So $3,700 bill for not reporting on 10,000 income, when in reality, it could have been a loss. And that brings me to the second point. So when we talk about accounting, we're not talking about the top line, the gross revenue. What we're talking about is the net income. So you've got to do all the additions and subtractions in between, is cleaning revenue income, Okay, it is, but then there's cleaning costs that aren't reported on. So you got to do all that adding and subtracting. We'll talk about deductions in a second to arrive at the net income, which is what you should be taxed on. So don't do what my client did in 2016 when he got a letter from the IRS and he ignored it because the consequence, we don't need to get scary, but the consequences are the IRS can essentially debit your account directly or assess the levy. So if you get any notices, that's where I think a tax professional comes in handy. For now, let's assume that we're going to do this right and not end up on the IRS's naughty list. You'd be surprised that there are things that they actually do catch, and not reporting on income is one of them. So therefore, what we need to do is we need to jump into the accounting bucket and make sure that we have all the adjustments to the gross to get to our net income and report it. And the last one is really important, which is local regulations and legal. And that's, can I even rent in the area that I'm in? And then the other part component of that is, okay, there's an occupancy tax requirement, meaning my municipality requires that if I earn 10,000 in income, that I pay X percent to the municipality, and sometimes it's to the city, sometimes it's to the greater metro area, the county, and the state. So there's different layers of that, and we won't be talking about that, even though it's important. We won't be talking about that. We help our clients figure out solutions for that. And of course, there are considerations like the platforms themselves recording and collecting on that. And I would say ethically believe that the platform should do everything they can to take that away because the local requirements are so onerous. But that's another topic. For now, we will stay in the taxes and accounting space. But these are the big three. And I think that if you do work with an advisor, it's important to say, hey, today, this is what I want to talk about. And just know that it's probably going to take the entire conversation and there's stages. So just something to note about how we think about breaking these up. And this is a slide that's just going to overwhelm you, but within the way we really think about tax specifically is that there's strategy, there's implementing the strategy. So the strategy might be, I'm going to buy another Airbnb. The implementation might be buying the Airbnb and making sure we do a cost segregation report. And the compliance is making sure we do the report and report it correctly. So the world of accounting and tax is very vast. And if you want to take a screenshot of this, you may, but I'm not going to get into the weeds of all this stuff. Just something that's important is that everybody wants to talk about strategy. Just note that there is a compliance piece, and you have to make time to address each of these in a holistic way. Well, let's get into the basics. So what we're really going to talk about here is we'll get into the brass tacks is how do I determine my income? How do I calculate deductions? And then what decisions do I have as a result? Then we'll break these down. So the first thing is where do I find my income? And I mentioned it before. I got ahead that the IRS has a transcript system where they do have the reported totals. And sometimes those totals are wrong. And sometimes you have to get the platform, just like you would with an employer when they issue a W-2 or 1099, they have to restate it because the IRS is just going to say, hey, there's a difference. And there's a way to work with it, but I'm not here to scare anybody. The point is, for most of you'll get a 1099K where box one, and you can see it there, it says 1A gross amount. So that is going to be the starting point on the tax return form. And then you're going to have to subtract. So you're going to say, wait a minute, if you're like my clients, you can say, wait a minute, I didn't receive all this income. Well, that's where the additional lines on the tax form come into play so that your net income matches what your net income actually is. I'll give you an example. So if the 10,000 is the total uh, uh, revenue amount and 3% went to the platform, then $300, what you received is $9,700. So $300 should show up on the tax form as an expense, as a commission expense. I'll show you where to put that. That's just one quick example of how you reconcile from the 1099K. Now, what we do, and also just highlight that the old threshold, if you're an Airbnb host or VRBO or whatever platform you're on, you're like, wait a minute, I've never received this document. Now I'm getting it. Well, the old threshold was 20,200 transactions. So you had the revenue threshold, and then you had to have 200 bookings. So what the platform said is they said, hey, you know what? There weren't 200 bookings. Yeah, maybe they did 100,000, but maybe it was a nicer property where they only occupancy is really low, they wouldn't have hit that threshold. Now the threshold is just 5,000, just 5,000. So now a lot of our clients are getting this. And if anyone on my team watches, make sure that we have the 1099K for all our clients because, as well as the tax industry, we're used to getting a gross report or self-reporting from clients, and now we need to make sure that there's no difference between what the IRS has and what we're reporting. Okay, well, let's also talk about other ways to look at income, and this kind of flows into the accounting. But I screenshot this is the gross transaction export, and I can actually, if you do have a question on how to pull this, we actually have instructions on how to navigate in the Airbnb platform specifically, as well as others, to actually pull this. But what this will give you is it'll give you a reservation by reservation export, and it will also include cleaning fees as well as any refunds, reimbursements. So if you want to find the detail, there's also a summary of these things. But if you want to find the actual detail from an accounting perspective and do something like divide by property, and look at income by listing, this gross export is where you do it. So what we do is we typically get both, and we're looking at the difference between what's reported on the 1099K. Okay, if that says 10,000, but your total payouts here say 9,700, what we do is we review the file to figure out what the difference is. So two ways to look at income for what you made as a host. Of course, it gets more complicated if you're a property manager and you're splitting earnings with your owners, if you will. Again, that's where this file is really important because we can actually see deposits. And then what we need to do if you paid out your owners is we need to issue them from you a 1099 for their portion so that you can deduct that on your tax return. So business expenses. Okay, what does the code say? The code says that you'll see a lot is ordinary and necessary. So ordinary essentially means that it's not irregular for your type of business. So would it be ordinary to see a tractor on your tax return? I would say it might seem extraordinary. Now, could we essentially get there? Could we get to the right answer? Yes. But I will say that I think there is a lot of I'm going to call it TikTok advice that says like you can put anything on there, and that's just not the case. The IRS has on the form that you file, it has an NAICS code. That's an industry code. And what the IRS does is they say, hey, what is ordinary and necessary based on kind of aggregate data? So, what is the average percentage of revenue that goes into commissions, for example? Like, okay, it shouldn't be 50%. Okay, what about depreciation? And that is going to be a higher amount. If you start looking at lines like auto and truck, and you've bought three Range Rovers because you saw that you could write off the whole amount, but you made 10,000. It just doesn't. It starts to seem extraordinary. So we definitely want to be conscious of what the industry is doing, and the benefit of working with an advisor that knows the space is that they can speak to what is ordinary in a very specialized way. The second one is necessary, and it's helpful and appropriate to help you make a profit. And that's something again that starts to, I think, in some cases people get creative, and it is important to be creative. And we do, like when we have a couple, for example, and we say, you know what, you should go and have a dinner where you discuss the business. Now, it's not all your dinners. It is something where we say, okay, can there be a monthly agenda or a quarterly agenda? And by the way, we actually think it's good hygiene for our Airbnb investors in a way, even if you're the property manager, to have a business dinner, to have a business meeting around that. So there are ways to get there, and I'm not here to say that tax professional is going to tell you what isn't ordinary necessary. It really is your determination. But I think there does need to be a reasonableness that applies to that. And yes, things like travel are important, especially if you are really meeting with realtors and visiting another location where you're seriously considering. It doesn't need to be another state. It can be the same state. It can be, I mean, really, like the question ultimately, if you're a client, is, well, like, are you actually going to buy, you know, are these trips happening every month? So there's definitely an egregiousness, but I think there's also, and I have to say that, but I think there's also a reasonable way, and we don't need to be extra conservative on this, but we do need to be reasonable. And I can't go through all of these, but these are the most common expenses in classification. So these are the definition. I would actually encourage you to take a screenshot of this. But what will I call out that's really important? So occupancy taxes are deductible. It is a question of whether they are collected by the platform, in which case it's not reducing the amount that gets processed to you. That's something to determine, and actually Airbnb does it differently based on different states or regions that you're in. So it is something that you need to kind of slow down and look at. I would say that depreciation is probably the most important category for Airbnb. And what can you depreciate? I'll talk about it in a little bit when I talk about bonus, but essentially anything that you're buying that's going to stick around the house for a year or longer gets depreciated. Some of those things can be expense, and depreciation is essentially stretching out the value of the cost over the life. So, a car is kind of the most common example. You divide it by 5, its useful life. So you buy a $20,000 car, it's 4,000 a year, and there are exceptions to that. So um, that is where I think things get a bit risky if you use a tax software, like they're taking a position and maybe you don't understand it. And it is, I think, a talking point that if you do have a tax advisor, you say, hey, I want to understand the depreciation sheet. Every tax return has a whole sheet dedicated to what's being depreciated. I think leveling up as an investor, as an operator, is being able to understand that and asking intelligent questions. So depreciation, I would say, if you don't understand it, it is something that I think is worth learning. Um, Sometimes there are allocations. So if your Airbnb is on the same property where you have your principal residence, whether you're renting out a single room or a back house or an ADU, there are going to be costs that you pay for the whole lot that need to be allocated between the business and the personal. You can't just push it all there unless, if it really is like if you have a HELOC to invest in that, can the interest be deductible? It can be, and again, exceptions apply. But hey, I used this investment or this financing vehicle specifically for the business. I didn't use it at all for the house. That's where we start to really build out what the tax strategy is. But property tax, if it's paid for the whole lot, you have to allocate between the business and the personal. And is that based on days rented? Is it based on square feet? Those are the kinds of conversations that are really good to have. And if you want to dive more into that, that is certainly something that we've created resources around. But general rule is if it is a fixed amount, then square footage is appropriate. If it's a variable amount, then you want to base it off of a variable allocation like days rented or days available. And the difference is actually important. Days available is I listed the place on January 1st. Days rented, of course, is the days that it was occupied between January 1st and January 31. And then days available also takes into consideration if you took it off because you let your mother-in-law stay at the place, and those wouldn't have been available, so you need to reduce it by that amount. So there's some math, and we always be like, hey, can you just automate this? Can you create an app? But there's some math and there's some logic to adjusting it. And what you really want to have is you really want to have a year where you get in and you really do all the detailed work, and then you're just adjusting on a monthly or quarterly basis. And that's kind of the point that I put that I think is really important with business expenses. We see it with our clients all the time. Is all of a sudden utility bill goes from 800 a month to all of a sudden it goes to 4,000 a month. And if you're in a place like Phoenix, Arizona, and a lot of your renting comes in during the summer when there's a lot of heat and AC used, that might be reasonable. But if you're in a place like sunny Southern California, it could be that you were double billed. And I think that's where accountants really start to add value. Is you say, hey, wait a minute, the month over month, it went from 400 to 4,000. Like, what's going on? Sometimes there's a reason, sometimes there's not. And I'll tell you the number of times that a vendor double charges, and sometimes it's that the accounting system breaks, or sometimes like you'd be surprised. Everyone thinks that, oh, once I sign up for QuickBooks or Xero, it's all taken care of. The number of times that we find discrepancies like double expenses is scary actually. So it's important to be able to look at things month over month. And if month over month is too much work, I would say quarter over quarter. I feel confident enough to say every investor operator who cares about their investment should look at things quarter over quarter. And if you have a property manager like we do, um, it's important to look at those expenses too. And I can't do it every month, but looking at it quarter over quarter, it kind of sometimes it is like, okay, we had a big maintenance bill because we had something we actually wanted to fix. Sometimes it does make sense, but other times like something's going on here, and I'm going to double click and investigate. And you can literally double click if you have an accounting system. So I think a lot of our clients are, hey, can I just spreadsheet this? And sure, we can get to the answer, but I think the value pays for itself when you are able to quickly pull something up on the screen, even while you're here, right? Some of you can pull up zero and look at your expenses. Some of you might be doing this right now. You're literally double clicking and you're like, wait a minute, yeah, that was a double charge. So I think those are some of the areas where the system starts to really pay for itself. And I'm gonna do a quick time check. I think I have like 10 more minutes. So I'm gonna speed through this. I'm gonna try and call out kind of the main chapters that you can revisit, and then I'll wrap with if you do want to learn more how to connect with our firm or how to use some of our resources so you can learn more and double click, if you will, on tax and accounting for your SDR business. So I'll quickly say again, this is a screenshot. We put all of our expenses into these categories. I can't break down each one. This is some of the stuff that we work with our clients on month over month, and it takes a little bit of time, especially if you're doing it yourself. It takes a little bit of time to kind of create the logic, but you can see there that we have guest amenities. And I think what I'll call out is that I think those are the most common deductions that get missed, especially if you are doing a full Costco run, for example. You're getting stuff for your house, you're getting stuff for the business, and you put it on your personal card, and you're like, oh, I'll come back to it, but maybe you never do. So when we do accounting, when you do tax return for a client, we look at guest amenities and we say, hey, I don't see anything here. Are you sure? They're like, well, I got the utilities, I got and they've got all the right things, but they forget that the toilet paper, the linens, maybe they've captured the startup costs, but all the recurring items that you make available for the guests aren't included. We say, hey, there's something wrong. So if that is you and you're doing one purchase, I would say the first thing to do is Costco doesn't mind because I do it, is you divide your cart, and you put the little marker there and you use a different card. And I do it all the time. Hey, I'm using a different card for this. They're totally fine with it anywhere. And even if they're not fine with it, it's worth it because you're going to pay less taxes and you're going to capture what you're actually spending on the business so you can actually evaluate whether you're making money. So make sure you're splitting that. And then guest amenities, it includes wine. I remember I kind of had an aha moment where the client was like, wait a minute, like wine's deductible? And I was like, yeah, it absolutely is. They're leaving a bottle of wine with a little note. It's a really nice touch. And also the Keurig cups, all the little things. I want to see guest amenities anytime we work with the client. So, and I think it's also important because it's a variable expense, meaning that it changes with how occupied your property is. And that's an important, I think, ROI metric. Because there are certainly properties that I've stayed at where you get nothing, right? It's like you're using it's just the stove and the pan and that's it. And you've got to call and ask for like toilet paper and you look at the listing and you're like, oh, it said it wasn't anything. Okay, but most properties are not there. So guest amenities, definitely expect there to be something in there. Definitely a good screenshot. Okay, and what if you don't have accounting software? So again, this is something else that I could spend more time talking on, but there's four things that you need if you don't have accounting software and you're going to put everything in the spreadsheet. Date, who the vendor is. I think the IRS code says place of purchase, kind of old school, but essentially today it translates to a vendor. The business purpose, how you're using it, and then the amount. And then what we do, you can see on the far right, we have a tax category, so that's where it's going to show up on the tax return. You don't have to worry about that just yet. Most of those things, three of those things will come off your bank statement. So to always say, if you don't have an accounting system, you're just like, hey, I just want things to be easier, just use a business checking account. That is my number one recommendation. Use a business checking account exclusively as much as you can because then you can download the statement and you've got three of the four. What's the missing one? For the good students on the call, you're saying business purpose. Yeah, exactly right. It's up to you to put the business purpose on there. And then you can have things like, Home Depot and then its decoration. It doesn't need to be It doesn't need to be eloquent. It doesn't need to be more than 2 words even. And then the last step is making sure that it flows into your tax categories. What are your tax categories? They're right here. And these here match largely the Schedule C or the Schedule E. So your accounting categories, as best they can, should match or be mapped to the accounting form, to the tax form. So again, another screenshot, but ultimately you saw going back actually, everything on the right flows through somewhere onto the tax form, and your gross revenue minus all of your deductions are going to give you the net income that you're actually taxed on. I'm just going to do a tax. Yep, quick. All right. So I'm going to try and get into what's to come in 2 minutes. But I will say that the biggest
Don't
decision,
stress about the time too much. Like if we leave a few minutes at the end for questions, we're good.
okay,
And I think one of the main things people want to hear about is like changes in 2025. So don't worry.
I'll skip to that. I'll just say again, this is something to bookmark, and it's whether or not your Airbnb is active or passive, and it does show up on different forms. There are now ways. So when we started off, there were two options, and the two forms had C is active and E was passive. There's been updates to the tax rules now where you can actually file a Schedule E, and you can take that loss even if you make above 150,000. If you don't know about this rule, I would just say bookmark it, come back to it. But I know from my experience, there's always a few who have done their research who are like, hey, I make above 150, I can't deduct the losses if I report on Schedule E. You actually can. And there's statements that you need to make. There are kind of details you need to keep, but this is kind of the big decision, getting to the income deductions decision that is going to impact whether or not your Airbnb is going to reduce your overall taxable income, or whether your losses, if they are losses, they're paper losses because depreciation if you own. So if you're an owner, you're going to have losses that you can't use until you sell the place or you have other passive income. So I'm going to just reserve that complexity. If you do want to connect later, that's where we can pick this up. But it is an important, I think, bookmark for folks. Let's talk about 2025. So I said I would talk about depreciation. I'm not going to be able to get into it, but essentially, the tax rules that came out during the Tax Cuts and Jobs Act allowed us to accelerate depreciation, meaning instead of having to spread out certain improvements over 15 years or 10 years or 7 years or 5 years, we were able to get expense treatment. And that helped everybody's tax bill when they did renovations. It also helped if you purchased equipment and if you purchase supplies and things that are going to have a long life. Those rules phased out, and I can actually show you. How they phased out. So in 2022, you got full. We said, hey, we bought something for 35,000. We're going to get full 35,000, and the tax savings, assuming a tax rate of 35%, saved you 12,000 in taxes. And you can just see that that goes down. And now we're in 2025. There's still a tax savings. There's definitely still incentive to go out and make a big investment, a big purchase. But because bonus depreciation is phased out to 40%, that tax impact has now been, it's come down about a third. So that is what everyone's excited about getting back. So the talk, and I have to be careful talking about politics, but the current president has said that in the first 100 days, and we're kind of through that, that there would be tax reform. And I think what I'm hearing is that we're waiting to see how the tariffs shake out, how the budget shakes out, and then that's going to roll out tax reform. And tax reform, will it be retroactive, meaning will it apply to 2024? And if you filed, now you're going to have to amend? We don't know. My personal belief is that the tax changes will be 2025 and on. So if you're someone that's looking at buying something really expensive and you're thinking, wait a minute, am I going to get 40% treatment or am I going to get full 100%? That is what tax policy is going to answer for you. So there's legislation pending in the Senate. Will that pass? Will it be a whole new revision? We don't know. What we will say is we do expect it done before the first half of the year. And then just given how it aligns with the tax filing, we've seen this with COVID and PPP and some of the legislation that happened earlier, is that Congress is not afraid to say this applies to 2024. Go ahead and amend all your tax returns. So as much as I think it's going to be 2025 and on, wouldn't be surprised if I'm eating my words, and just give me some grace because I'm just hoping that Congress doesn't make tax professionals' lives very difficult by having us amend every return we filed. So part of that is my hope. But yeah, that is a huge bonus depreciation changing is the biggest thing you should care about for 2025. It will spur investment and it will also spur tax advantageous purchases of new Airbnbs and doing cost segregation. So again, that's kind of like level 301. I want to keep this level 101, but that is something to note. Um, and then I'll just say that there was talk about raising taxes. So far, they're kept the same, and we don't know if there's going to be any changes there. But I will say, and I kind of joke about this, that the difference between married filing jointly versus filing single at the top rate has gotten so small. I almost joke like, does it even make a tax difference being married? I want to be careful of that too. But yeah, by and large, tax rates are kind of narrowed, and we think that's here to stay. And I'll have to leave that there because I definitely want to get to the last point, which is there's just kind of recapping exactly what I'm saying. So track your expenses, monitor. We want to get to that month over month, the mom. If not quarter over quarter, but certainly year over year, because looking at how those things are changing is going to make you a better, I would just say, investor. Because ultimately that's what we're doing. We're investing our time and our money into activities that have a long-term benefit for us, and that's where you capture it. It's not just about getting the tax benefit this year. We do suggest looking at your tax consequences as a result, because paying a big estimated tax at the end of the year hurts a lot. So paying that upfront, paying that over time, or having a tax reserve account. And I give you some of the tools that we use. I would say find a high interest savings account. If you're not going to make taxes, put it away and get something like 3-4%. It's not super high, but at least you're not losing money on cash and you're setting it aside. And then it could be that when you file your tax return, your tax bill is less than what you've set aside. And that, it's all tax free. You can just take the difference and do whatever you want with it. We use Zero internally for accounting. We think it's a simpler tool for Airbnb hosts and property managers. And then the last thing, in terms of setting up a business bank, we do have a special referral with Relay. Again, I don't mean to say do that. I just mean to show you kind of like what our finance stack is. That if you want to borrow from how we do it, you don't even need us. You can just go ahead and do that yourself. I get listed estimated taxes there, and I would just say file when you're comfortable, not when you have to. That is the standard that we live by. We want to make sure that every position we are taking we're comfortable with. And look, at the end of the day, we want to pay exactly what we owe, and not a penny more. You don't need to leave a tip for the IRS. It's not necessary at all. And working with an advisor has value in that amount we work together to make sure that it's not a penny more than it really should be. Um, I want to leave this up just for a screenshot, but with this, I think I'm ready to move over into Q&A. I think we have one last call to action, but there is that payment is due. We provided a little step process to file that extension payment that's due on 4/15. So take a screenshot of that. Feel free to engage with us. And then lastly, I will say that if you do want to learn more, we do have resources on our website. Kind of says it there on that last bullet point. Go to our website's Airbnb resources. We've got a kit, and there is, I think, a very special promo code that is good till Friday. So not a lot of money. I think we make it as close to free as we can so that we can empower you to do it. And certainly, if you do want to connect on a deeper level in a service engagement, that is what we're here for. But we certainly want to make as much available to you as possible without having to, change advisors or any of that. But we're here to help in any way we can. The last thing I'll share is this is our newsletter, so you can stay in touch with us and keep update on what we're reading and what tax changes are. So we will, and we do actively monitor when things change. And the last thing I'll say is that we are very conscious that we need to add value to our client base, tax-wise and operationally. So we're always looking for Airbnb hosts that want to come on to our webinars and talk about their experience as a webinar host. The last thing I'll share is just if that sounds like something you want to do, please reach out. I think the email that you can reach out to is hello@sharedeconomycpa.com. So if that sounds interesting, we'd love to have you on and actually show our clients more Airbnb hosts to actually talk about what it's like to run and deal with the actual business, which is why we love working with Lodgify as well as our host. So I'm gonna wrap there. Oh my gosh, I need a drink of water. I'm gonna pause.
Thank you so much, Miguel. Great presentation. This is obviously a huge, huge topic, which is, why so many people want more information. Um, in addition to being location specific with different, regulations and taxes. So obviously hard to tackle in an hour, but I think you did a great job of breaking it down. So thank you so much. And yeah, you said you guys are always looking for expert speakers for your guys' webinars. I'll include your guys' email in our thank you email being sent out tomorrow with the webinar recording for anyone interested getting in touch. But in the meantime, we can jump over to Q&A. We've got a handful of questions we can get through. First one, pretty to the point, 1099 miscellaneous versus 1099K.
Yeah, it is interesting, and that might be well. So I'll describe the kind of definitional differences, and then I think there's something in there. But yeah, a 1099K is just the amount that gets processed through the platform. So that is essentially a payment processor saying we've processed X amount that we've in some way mapped to your social. So it's not our money, it's your money. And a 1099 miscellaneous is usually compensation. So it could be that you get a 1099K for some amount and it includes the 1099 miscellaneous. And the 1099 miscellaneous is for non-service compensation. So essentially, if you had a referral code where you invited other people to join the platform and you got $200. Now the threshold's like 600, so it'd have to be like $1,000 or something. Then that amount's going to be on the miscellaneous. And then in terms of like how you should see them as an Airbnb host or as a property manager is you should be 1099ing your owners. So essentially, you get the 1099K, like I said before. Let's say it's for 100,000, and you kept maybe 20% of it. Well, you've got to allocate. You've got to do the dance. You've got to allocate that amount that went to the owners to the owners. Now, if it's done through the platform, um, there should be a way that Airbnb is breaking it out, but that feature has been new, so I'm not exactly sure how that comes out. But yeah, that is the main difference between 1099 miscellaneous, 1099K. And if there's a deeper question there, feel free to send that out. Hello at Share Economy CPA. I can't guarantee we'll get to everything just because it is tax season, but we'll certainly at some point I promise we will reply.
Awesome, thank you. This next one you obviously touched on, but I don't know if there's anything you would want to add to deductibles and how to handle them.
Yeah, and I think the best thing I can kind of do is just share the list of kind of most common deductions that we see.
Mm-hmm.
Uh, let's put it up here. So what is deductible? So I guess I'd be curious if there's anything more in depth that like if there's anything not on this list. I think you'd ask, but mostly I mean, look, if it's for the business and you did it because and you share it for the benefit of the guests, it's deductible. I recommend moving like your Netflix subscription over to your Airbnb business. Things like that are going to be 80%. I got that. Even well now, it's like there's like 18 different platforms you can get subscriptions to for streaming. But look, I mean, if most of the reason that you got that is for the benefit of the business, then it's a business expense. So that's how I think about it. Um, I think cars is where it gets a little tricky. You can definitely do a portion of the car, but what the rules say is that in order to depreciate, to get bonus depreciation, which is like what people really want, the car has to be 50% or more for the business.
Mm-hmm.
So there's two ways to get there, and like I have a tax advisor too. It's good enough to do your own taxes, in my view. And she asked me like, "Well, do you have a second car?" So like I go through it too. It's like, yeah, I do. I actually have a business car and a personal car, and we're still allocating business miles versus personal. So I would say that, you really want to make sure that you've got the substance in order to make big purchases. And that's why you work as a tax advisor, because we want you to be comfortable and we want you to have the tax savings. But look, I mean, if you're really buying a second vehicle because you don't want to put miles on, the family car. I mean, that's totally a business expense. So yeah, I would say if there's anything on here that either doesn't make sense, please put that in the chat, or if there's anything that's missing that you don't find a home for here, certainly would love to hear about it.
For sure. Yeah. And I think you said it before, but this is just a great opportunity to screenshot so you have these handy later. Kind of related to travel. If the STR is out of your state, can you deduct flight and car rental to visit or work on the property?
Yeah, and in fact, the code has specific provisions that say that days that you stay at the property to maintain it are not deductible. So I'd go as far as saying absolutely, and make sure that you're not saying that the property wasn't you're not hurting the allocation because you were staying there. But yeah, traveling to the property, it's part of the reason my partner and I decided that we would do Rosarito, Mexico. It's really nice when it gets really hot in Texas. So you can bet that there's a good portion of that that's getting deducted for business purposes.
Yeah, if you have to travel for work, might as well enjoy it, right? I love
No
that.
reason you can't have fun getting a tax benefit. It's not in the code.
Okay, let's see. This one might be more specific than you can address, but I'll put it here just in case. Do I pay city occupancy taxes on the entire amount Airbnb and Vrbo deposit to my account? Are the cleaning fees collected taxable on my 7% occupancy tax?
So yeah, that is a support ticket for Airbnb or VRBO, just because the regions are so different, and I wish that there was like a national conference or some guidance that said like, hey, Nashville, Tennessee is going to do the same thing as Austin, Texas. It's just different. So you do have situations where some municipalities are charging the cleaning fee as their own revenue, because I mean, we're smart. Like we start figuring out like, oh, wait a minute, if we decrease the nightly rate but increase the cleaning fee, my occupancy taxes go down. And again, like our rule is to know what the rules are and adjust. So there's no rule that you can't do that. I just don't know what municipality you're talking about, Roxanne. But I would definitely ask, and I would optimize around whatever the rules are.
Yeah, this is where it gets tricky with the rules just being so different from one place to the next, right?
Yeah,
But yeah,
exactly.
good reminder to do your research. Um, Here's a question from Megan. What if you're doing a cost seg study and don't know what to pay when filing for an extension? I know I did not pay enough. I don't. I'm not sure what a
Well,
cost
Megan,
seg study
she's a
is.
client, so I think Megan, we should definitely chat. We've got a few days. But
Okay.
just taking kind of the general question, yeah, we want to get to an estimate as best we can. So, if again, if this is kind of a hypothetical, I would say that there is going to be a reduction of income with the cost seg, which can be modeled into a tax projection. So I wasn't able to go into the slide about how to calculate your extension payment, but I would say in this case, Megan, please send me an email, and we will get you a better answer than that.
We're at the hour. Do you have time for a couple more?
I can stay for about 3 to 4 minutes more.
Okay. Let me choose the one that seems the best for everybody then. It seems like traveling is pretty top of mind for everybody, traveling for work. So let's go with this one. Um, does that mean that you can't stay at the property if you are deducting travel to the area to do work on the vacation property?
Yeah, you can. So I was saying is the tax code says that you not only can you deduct the travel, but that you don't need to like I was saying earlier, that with allocations, you have to mark your personal days. Um, but if you're going there for repairs, those are still business days. So yeah, there's two benefits going on. You don't need to reduce the available for rent, and really that doesn't really matter come into play if the rental is 100% a rental. I think this comes into play when, like I was saying before, if it's an ADU, you wouldn't
Mhm.
travel to an ADU. But let's just say that it was mixed use, whether it was long term and short term. That's when the allocation comes into play. But yeah, 100%. Well, I got to be careful saying 100%, but I will say generally that it is deductible to go to an investment property, and there's different ways to track that. So I think it has to be reasonable. I mean, if you were in Dubai before this and you take a first class flight to a place that's 100 miles from your home, I mean, we're gonna have a conversation, but certainly some portion of it would be.
Right. No, that makes sense. And I think that's a good place to wrap it up. I did see one question in the chat about whether the Q&A would be included in the recording that's sent out. And yes, the full webinar will be included. So you can revisit these topics whenever you have any doubts. And also just so you guys can access it later in case you want to revisit any of this stuff. We'll include a link to your guys' tax kit as well. So you
Great.
can have the resources when you need them. And yeah, just a big thank you to everyone again for joining, and a very, very big thank you to you, Miguel. This has been super helpful. Um, and obviously very top of mind as we have tax day coming up. So thank you.
Thank you so much.
Bye.